Hello, hello. Good morning, everyone. What's going on? You guys hear me loud and clear? Everyone hears me good? Just give it a second. Let some people hop on 1 more minute and we'll get started. All right, all right. Let's get into it. Okay, so one sec, sorry. Okay, so yesterday we had a fake out breakdown, fake out break up, and then a fake out breakdown. As you can see, we recovered with the news today. We ended up having news at 8:30 a.m. an hour before market open. We had two red folders: Canadian unemployment and employment change, and then we had USD average hourly earnings, non-farm employment change, and unemployment rate. So which did come back pretty good. The reason why we are exploding in the pre-market. So we just ended up breaking in the pre-market yesterday's highs. Okay, so 599 is a big resistance level, and I knew yesterday this is why I did not swing trade puts. For the reason because the market has been doing a lot of fake outs. It's faking out both directions. So what is the best opportunity to make a successful trade today? What is the best levels to be trading at? Very, very simple. We have a massive resistance level at 599, a double top there yesterday, as well as in the pre-market. Now, if you look, I want you guys to add this level to your chart. You see 597.58 right here, 597.58. Let's zoom out and look. Look at all the resistance level, all the resistance that we had at this level yesterday. Look at all the resistance level we had the day before and in the pre-market. Now, you can even go back all the way to May 29th and look at all the resistance that we have at this level. If you're looking at the 30-minute time frame right now, we officially have held 597.58 as a support, which means this is extremely bullish right now. Even though we're at a resistance level, it's still wise not to be thinking puts until we get a break beneath a 597.58. I don't care if puts work. If this ends up being the high at 599, I'm not trying to bottom tick. I'm not trying to top tick. I'm trying to wait for the confirmation. Once we get back down to 597.58, we're going to have a 30-minute bearish confirmation candle, and that's when we will end up taking the puts down one full point to 596.50. You have to sell at 596.50 because it is yesterday's previous resistance. SPY likes to make previous resistance back test to create a support for the next leg up. So if you do enter puts, just know at 596.50, this is where a bounce could happen. SPY's previous closing price is 590. Where is it? 593.05. So we'll put a gap here. We have a gap to fill right here. The chances of us filling this gap today is unlikely, but if you know how SPY's been moving lately, anything is possible. So if we end up bullish case scenario, right? What am I looking at? I'm looking at this resistance pocket between 597.58 and 598. I want this to come back down and test as a support, and I will end up getting calls to 600. And if we do not get a dip back down to this pocket, which we don't need to because it's already happened in the pre-market right here, right? I'm going to be watching 5.99, and we should be able to get a point to a point and a half to the upside, right? But this is not a time for bulls to start celebrating yet. We need to break out of 5.99 resistance. This is why if I do want to be buying calls, I want to be buying calls at the best level in my pocket. This is the best risk to reward. This is where you are wrong once level. Okay? And when it comes to puts, this is a big level, 597.58. If we get a bearish 30-minute candle and we close beneath of this level, that's when I'm going to be getting puts. First level for puts, as I said, 596.50, previous resistance. And then we're going to be going all the way back down to pre-market support at 595.23, our key level from yesterday. If you look at the market right now, most things are green. Bitcoin's still average, right? Tesla recovered a little bit, almost up 5%. So a lot of people could be taking profits at this level. The market is still full of uncertainty right now. So make sure you are buying where you're supposed to be buying, right? Don't chase, don't FOMO. You need an entry. You need to have a preset entry, right? A predetermined plan. This is my trading plan in this pocket or right here. I am not trading if it's not in this pocket or not at this level. This is where the big moves are going to happen to the upside. This is where the big moves are going to happen to the downside. We don't trade empty pockets. Between 598 and 599 is considered an empty pocket. You don't want to be trading in no man's land. You buy here and you buy here. That is the trading plan for today. I'm trying to make a bag and get the hell out of here. I got some stuff I have to deal with today, unfortunately, but we're going to make some money, God willing, and get back into it. If you look at the daily time frame right now, we have a bearish candle, and then we just pretty much broke on track to be breaking the highs, okay? So don't get overly bearish. Don't get overly bullish. Look, this channel we've been trading in is from May 12th to today, right? This is sideways price action. Look at it. We go up, we go down. We go up, we go down. We go up, but watch. Look what's happening. We are still making higher lows and higher highs. The trend right now is still bullish. We get bearish once we break the previous floor, which we did yesterday, and you could tell from this move right here that news can fake people out. This is why swing trading is extremely, extremely high risk, and we don't want to be trading and swinging anything. We want to be in control of our money at all times. That's it. We want to be in control of our money. So if a trade goes against us, we want to be able to get out of it, right? And have risk management. When you're swing trading, you could be up in the pre-market, right? Up in the after hours, one market opens, done, right? Or you could be up in the after hours, you're celebrating, you're up a little bit in the pre-market, and before market opens, it just starts dumping or just starts ripping to and you can't get out of it until market open, right? So we're not in an age where swing trading is going to be beneficial right now. Obviously, if you have a crystal ball, you would have bought calls yesterday. Good for you. And vice versa for every other day with these big volatility swings. But for right now, we're on track. We got a 5-minute bearish confirmation right now at 5.99. So remember, I'm not trading in this pocket. I'm going to be waiting for 597.58. Ding, ding, ding. Market is open. Let's make some money, ladies and gents. Remember, this is no man's land. We don't want no trades here. No trades in here. If we don't come to our pocket, I'm playing 5.99. Yes, I will be buying calls at the high of day with confirmation. I do not care, because if we hold 5.99, we are going to skyrocket. Just have some patience right now. Good morning, T. What's going on, bro? Bulls are in control. Chart is strong right now. Previous 30-minute candle strong. Avoid puts right now. Yes, you could top tick. Yes, 599 is a resistance level. If you want to hit puts there, be my guest. To me, I need confirmation. We just broke the highs of yesterday, so I'm just chilling. But yes, if you are bearish, this is a great risk to reward. I'm deciding and choosing not to take this trade. Remember, the longer you look at a chart, the longer you look at any stock, opportunity is going to present itself. You're going to see things no matter what chart you're looking at, what time of day. But you need to have the self-discipline to pick and choose which levels you want to trade at. Get your money and leave for the day. And if we don't get an entry today, I'm not going to take a trade. There's zero rush, right? We want to go with the trend. The trend is bullish right now, but we're at a big resistance level. History has shown us every time we come up to these levels, we sell off very quickly. So, and that's why if we hold 599 as a support, we're going to blow through 600. But remember, we're channel trading since May 12th, so anything could happen here. That's why I'm not a gambling man. I don't want to be gambling right now. Take a look at the one. Remember, this level is a wrong once level 599. If it doesn't work, it's going to fall empty pocket straight down 1 point. 1 minute just had quite a big rejection. Candle's not done yet. I personally don't like trading within the first 5 minutes because usually the effery happens in the first 5 minutes. So it's always good practice to stick to your rules. My rules: don't trade the first 5 minutes. Remember, a lot of bears are lining up at this level. I'm not going against a 30-minute time frame. And the fact that we took out yesterday's high too. Just my only issue for calls at the moment is it's a big overreaction trade. So just watching my moving averages, I don't like how far we are from them on all the time frames. So I'm just patiently waiting. Patience here. This is a 599 is a fake out level. Even if we get a pump here, there's a chance we could come back down. I got 598 calls ready to go. Same day till expiry. This is an empty pocket to 600. But this is where a fake out could happen. I'm just being patient right now. A lot of bears are lining up at this level. It's an overreaction trade. We broke through a lot of stuff in the pre-market without retesting. So I'm just picking and choosing my entry. I don't care about the put side right now because we're holding support at the previous resistance. So until we get a 5-minute candle close beneath that level, then I'll switch to puts. And there is no more news for the rest of the day, so we could get some slow price action. And that's what I'm prepared for. I'm buying the next pullback. We didn't get a confirmed support. Oh yeah, we did on the 5. Remember, there's no rush right now. Just PTSD, so many fake outs from the last few days. You want to be very, very... I need extra added confirmation before buying calls over this high. And for small accounts, cash accounts, 600 to 629 is looking like a great opportunity for a short, but we could have a very bullish candle. So you're going to have to wait. If you get a nice 30-minute rejection, right? Nice 30-minute bearish confirmation candle between 600 and 629, it's a good level. Market's only been open for just under 10 minutes. Do not worry if you haven't hit a trade. I'm just trading very, very soft today. Very, very, very soft. I don't want to get faked out. So this was the level that I did want to get calls, the 599 calls. I didn't like it, so I didn't enter it. I don't want to force a trade. But ideally, like any other day, or not even, if this was like 30 minutes into market open, I would have bought this. Not first opening candle. And if we hold 629, 630, it's an empty pocket up to 601.79. So my call play worked out perfectly. I should have taken it. I did not take it though. And remember, this is a massive psychological level, 600. This is one of the biggest levels we have on SPY, the biggest psychological level. Everything is bullish, but this is, if we do get a pullback would happen very soon. I'm just not buying puts with a 30-minute candle like this. Again, once we crack 598, I'm going to hit puts to 598. Or if we crack 599, I'll get puts to 598, 597.50. bears are lining up right here. But we're smarter than that, right? We go with the trend. Perfect call play, 599 support, money, money, money. Now we're just chilling to wait to see what 600 does. Remember, we have no news today. The first 15 minutes is usually retail. Market makers will choose a direction very soon. So a lot of people are lining up to be buying puts right now, but look beneath of us, right? 599 is already a support. So you always got to think about your risk to reward. Just because you're at a good level, you also got to take a look at the 30-minute time frame. You got to be looking at the micro time frames like the 1 minute and 5 minute. If everything looks strong and we have lower support, if you do get puts here, where are you going to sell it? Because you're going to be anticipating a double bottom, or you're going to be anticipating a high day, which is usually not a good thing to do, right? Because you can easily get smoked like that. So what I personally like to do is, if I am at my level and this is a bullish trend, for me to get puts is if we get a double top and we look for weakness, and then I'll hit puts. But think about it. This is only going to go to just a little bit under 600, right? In the most bullish case scenario, just to hold support of 600 for the next leg higher. I got 599 calls ready to go. I'm waiting for support of 600. Remember, I'm not chasing. I'm waiting for the break and the retest to enter. I'm not just buying calls right now. Even if this decides to go, I don't care. I follow my rules. I wait for a break and retest. And sometimes you don't get the retest. So you have to sit and wait for your next level, like 599. It held support. You don't get in. You have to sit and wait for 600 to become support now to go with the trend. You don't buy breakouts. Personally, that's what I do. You can do whatever you want, but that's just how I learned. Strong 30-minute and 1 hour. I'm going to snipe 600 puts fast. I'm just sniping. I'm in right now at $1.25. I'm looking for a retest of 600. We overshot 600 by almost $1. So this is not for small accounts, cash accounts. And this is not the smartest thing to be doing, but usually when we get this big of a psychological level, 600, this is where you can, and we overshoot it. Like people are lined up here for puts, people are lined up here for puts. So I buy the puts at the top to get the pullback to 600. And you got to be also watching as strong as we're looking right now. 600 is a massive psychological level, right? So what I'm doing right now isn't the best practice, but it usually, this trade usually works out for a retest of at least 629, 630, my key level. And the first place I'm taking profits at is going to be 630, right? I don't buy off my moving averages, I sell off of them. So, which is, if you're above them, I'm looking and I'm in puts, I know that's the first level of a bounce. I personally use the 9 EMA on the lower time frames. And the reason why the first stop I'm going to take profit, again, we got the 9 EMA, but 600 we should retest. But remember, big bullish days like this, we will not get a retest. It will just keep going. That's why I said it's not the smartest thing to be buying puts right now in such a bullish trend. I'm a professional and know what I'm doing. But it's still higher risk, right? Very high risk. And now my price target just hit. These contracts aren't doing too much. God willing, we go in the money, but this is the first level of a bounce. Remember, 630, first level of a bounce. And if we end up holding 630 as a support, we don't have to go to 600 because we held the next key level above that. And so what I used to do, what usually got me claps sometimes, coming up to 600 like this, I would hit puts. And then I realized it overextended. And then I realized even the next 5-minute candle usually overextends too. So that's why I buy the overextension peak, the new high of the next candle that breaks above such a psychological level. And if you see 600 break, you want to see a 5-minute candle close beneath of 600 to even entertain puts, right? It's not good to entertain puts in this bullish of a run. It's not good practice. So pretty much I'm just looking for weakness under 630. And then that will bring the pullback to sub 600. Remember, if you're in puts, you have to sell at 600, the first level of a support. Right now for bears, not looking too hot because our upper level 629 is holding support on the 5-minute time frame. I'm giving it this candle to break the low, and then we should get a healthy pullback. But in squeeze case scenarios, when everyone's loading up on puts, SPY will not retest even the biggest freaking level. So that's why it's not good to go against the trend on strong days, right? You don't want to go against the trend. But this minimum, we should go 590, 599 90s, 599 80s. This is the level right here. If we end up bouncing up here, I would avoid puts. We need this. We need to break the low of this previous, just like this. Beautiful. And you have to sell in the money. You have to sell at 600. Even if we shorted the absolute high day right now, who gives a hell? You have to get out. That was light work, baby. Light work. And remember, you got to scale out at support. As soon as we break 600, y'all got to get out. I'm telling you now. This is even a good area to start letting some go right now. Right? Because you want to sell the move. When your contracts are rolling, you want to sell the roll. You don't want it to stop. Okay, I'm looking to scale out right now. And we just retested 600, a little bit lower. I want to see 600 crack. But this is where we could hold support. This is where bulls are lined up right now at the 600 level. I am completely out of puts right now. And that was a good successful trade. If we see under 600, first 5-minute candle closing under 600, that's when you could wait for the retest of 600 and get puts again. But where are you going to sell at? Because 599 is a support. And then you're going to be in an empty pocket area where anything could happen. And look where I sold and look where we're bouncing right now, right? You have to sell at 600 because it's a first level of a bounce. It's such a psychological level. That was almost a full dollar, right? From when we got in, pretty much the 680s back to 600. It's a good little snipe trade. As I said, it is a higher risk trade because sometimes we don't, in bullish days and bearish days, we will break through the most psychological levels and not retest. That's why overextension trades. See, I got in before I even had bearish confirmation. That's why I tried to explain it is a higher risk trade. But as of right now, let's wait to see where this 5-minute candle ends. We end bearish here. I'll get puts again. If you're bullish, if this candle ends above 600, put or calls could go up again too. And I preach to everyone, you need one trade a day. That one trade is all you need. All right? It doesn't even look like a big move. You make 20, 30 cents in your contracts, man. You can't complain. Secure the bag and get gone. All right, we got a nice sloping resistance. If this shit cracks, it's going to be quite nice. Oops, what am I doing with this thing? I got 600 calls ready to go. My last trade, 600 calls, just going with the trend. 600 mass psychological level. This is a U-turn level. This is where shit could die, potentially, right? Just keep that in mind. We're most likely going to retest under 600 right now. I'm going to be watching the 5-minute time frame. Just shorted the high of day. If this trend holds, I'm looking to be buying calls to a new high of day or just shy of a new high of day, lower high, double top. There's a pullback. And if you could look on the 5-minute, my closest moving average, the 9 EMA, is 50 cents away from here. So I'm avoiding calls until this candle ends up closing back above 600. This is the point. This is the make or break it point. This is where we flip immensely bullish right now, right? Or we come back down to 598. I'm looking to buy this dip right now to go with the trend. I'm just seeing how we react here. I got 600. No, I'm gonna go 599 calls. Get out of here fast. I just bought 599 calls, $1.98. I'm looking for 629 to potentially a new high of day. Remember, this is the break and retest of 600. We could die here. My stop loss for these calls are 599.63. The bottom, the low of the previous 1 minute wick. Just seeing how strong this trend actually is. If we end up flipping bearish, that's okay. A lot of people are chasing puts right here. It could work out because it is a psychological level. But we just had a nice pullback. I'm looking for a higher low right here. I'm debating where this candle opens or where this 1 minute candle closes. I'm going to add to these or I'm going to cut this. Remember, this is a U-turn level to 600, right? We are bullish. That's why on the 5 minute time frame, I'm watching this very closely. It looks like we got a nice bounce off the 9. This is exactly where we could reverse and end up holding 600 for the next leg up. This is also an area where we could die, right? But I'm going with the trend. We could go a little lower, 599.50 as I stated, the 9 EMA. But I'm locked and loaded right now to potentially a new high of day. And the trend is your friend until it's not, right? So you go with the trend. You don't get overly bearish when we have lower support, right? Look at 598, support. Now we're at 600, right? If this candle closes green, this 5 minute candle, it's a bounce off support. And we're most likely going to make a lower high to a new high of day. As soon as we hold 600, empty pocket to 601.79. And I'm up 25 cents or 30 cents on these contracts already. I only hit that with 20 contracts, but fuck it. I'm still happy. And always sell the move, right? Get in, get the hell out. Even this little micro trade was good. And this could potentially be another call entry right here to go back up. Remember, 600 is going to be a lot of fake outs, right? We're either going to make a lot of money right now, or the bulls are going to stay in control, or this is going to be a fake out and we're going to start breaking down. But 600, massive psychological level. We know from the last couple trading days, SPY hasn't been respecting too many key levels. It's been doing a lot of fake outs, but if I'm going to get faked out, I'm going to be going with the trend with confirmation, right? I'm okay to get faked out. If I'm with the trend and buying confirmation, if I lose, okay, it happens, right? I just stuck to my trading plan. The first 5-minute candle close under 600. Stop buying calls till we are back above 600 on SPY. 600 is a big level. If we close under 600, very, very bad. Not bad. Micro. Right? Micro bearish. And we know that market makers have been fucking around lately, right? A lot of fake outs in both directions. This trend does look bullish. This could flip extremely bearish very fast. Let's take a look at the 30-minute. What did the 30-minute do? Yeah, this is around 50% retracement, coming a little lower. We did get a double rejection. This 30-minute candle could engulf the previous 30-minute candle. So as soon as we end up closing beneath 500 on the 5-minute time, or sorry, 600 on the 5-minute time frame, I would just avoid puts or avoid shorts. Sorry. But right here, this is the 9 EMA. This is the closest level. So if you are in puts, this is the first level I will be looking at to sell puts, because this is where usually bounces do occur. I would get calls ready, 5.99 calls. Remember, with the trend, right? We're with the trend until the trend breaks. We are waiting for calls above 600, right? SPY needs to take back control of 600. We have sloping resistance right now, right? So to even be safe, you want to wait for 629 to act as a support for the breakout. And this is the retest on the 1 minute of 600. This is where we could get some downside right now. We hold above 600, market buy calls. Until then, right? We want to hold 600 to get bullish. You don't want to be buying calls down here. You want to wait for 600 to become a support. That's confirmation that we're going to be breaking back up. When we're making lower highs like this and lower lows, it's, even though like I love calls here and calls could have the potential to explode, it's bad practice because you're in a lower high formation, in a lower low formation. So that's why above 600, this is your best opportunity to be buying calls. I'm going to get going in like 5 minutes. I'm just waiting for these calls to, God willing, that these break back above 600 and we both flag it up, baby. We need to hold 600. Because the last thing we want to do is see a roof being developed at 600, which means weakness, right? So even though we are in a bull shape, a bull flag pattern, this is still a double rejection to 600 right now, so calls are still not it. We need a break above 6. And even on the 5-minute right now, this does look like a break and retest of 600 where puts could go crazy. You want to wait to see where this candle ends. So I got my price targets for the 30-minute time frame, 5-minute time frame. Now I'm just waiting for the 1-minute time frame to hold above 600, and that's when you peg calls. But you see this roof being developed right here. There is a chance that puts could work. So if you are bearish, you could short 600 right now with a stop loss in risk 30 cents. But this is a bull shape pattern. I just market bought calls again. $2.03. I'm looking, if we break the low of this 1-minute candle, I'm out. And there is sloping resistance up top, a sloping resistance, sorry. Now this is the back and retest of 600. This is where we could hold and moonshot, or this is a fake out breakout and we end up going back down. Strong break, pull back on the 1-minute. If SPY is going to rip, if SPY is going to bring us a lower high, a new high, this is the entry. This is where you buy calls. But you have to trim at 629, right? You can leave runners because we have sloping resistance up top. So you don't want to hold anticipating a break because it may not happen, right? And if you're in calls right now, your stop loss should be 599.73. Hard stop. The trend is bullish, right? We're holding 600 on the micro right now. We're looking for a nice clean break above 629. And we just hit my sloping resistance on the 1. We're waiting to see how strong this is. A lot of people will be taking puts right there. So look at this. We had a strong break through 600. We broke back beneath 600. This is the retest of 600. We should, if sloping resistance breaks, we will get a pop to 650 or more some. But we just hit off a sloping resistance. And if we break the low of this previous 5-minute candle, that's it. Avoid calls. That's why you have tight stops. You see where you talk about market, a lot of fake outs. That's why you cannot be entering this market without a proper stop. Like it overshot where I set the stop out at 599.75. You see how it goes all the way down to 599.38. If you would have stopped out here, that's stupid because first of all, this is the VWAP. This is exactly where we could bounce from. And this is why you wait for 600. Now, the next time we get back above 600, calls or explode. So avoid calls until we're back above 600. That's it. You have to avoid calls till we're back above 600. And there's going to be a lot of stop loss bars, right? I would not even be surprised if this candle flips green. That's just what the market's been doing lately. All you got to do is set an alert for 600. Once we get back above 600, moonshot. Until then, avoid calls. Avoid calls under 600. I'm telling you right now. Do not buy calls under 600 because this is such a psychological level. This could be a massive bull trap and we could die today. Chances are we're not going to, but anything is possible, right? So you want to wait till we're back above 600. 600 is your best risk reward for calls. Anyways, guys, I'm going to get going for the day. Thank you guys so much for being here. If you need anything, hit the DMs up, and I will see everyone on Sunday. I'm going to do a masterclass on Sunday inside the Daily Sniper. And yeah, guys, thank you guys so much for being here. I will see everyone Sunday. Take care, guys.